a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to take a look at financial ETFs now with our ETF Research Director, Nina Mishra. So why, at this particular time of year, are the financial ETFs good to look at?
So financials was one of the worst performing sectors earlier this year.
Yep.
But these stocks have been doing well of late, and there are a number of reasons behind this rebound of financial stocks. First of all, the yield curve, which had inverted earlier, has kind of uninverted. It's back to its normal shape, which is a steepening yield curve. And one of the reasons why it has uninverted is because the Fed has started buying short-term treasury debt to calm the money markets. And an inverted yield curve signals recession, usually. So that is not good for bank stocks or any stocks, but banks in particular. So uninversion hurt bank stocks. And inverted yield curve is also bad for bank earnings, particularly regional bank earnings, because banks, they have shorter term deposits and longer term loans.
Yeah.
So steepening yield curve is better for their earnings. And then we saw that most of the banks, they had better than expected earnings in the third quarter. The jobs report was also better than expected. That helped banks because an improving economy is good for consumers and good for banks. And I didn't mention it over there, but trade optimism has also helped banks, because particularly bigger banks, because improvement in trade negotiations would help the global economy, which would be good for bigger banks. And last but not the least, because the stock market has run so much, particularly technology stocks are up almost 38% this year. So some investors are now looking at some of the beaten down sectors which look attractively valued, and financials are one of them. They look attractive in terms of valuation. So that's why we have seen a lot of inflows into financial ETFs in the past few weeks.
Well,
and they have been doing well too.
S&P 500 stock valuations are at an all-time high.
Yes.
Highest they've been since 2017, I believe.
Right.
So
yes, value-focused investors are looking at some of the other sectors of the economy.
Yeah, and in case there's any question, I am at my normal shape too, so in case there was a question on anybody's mind. All right, so let's take a look at some of these ETFs. The Financial Select Sector Spider Fund.
So I have 3 ETFs with very different kind of exposures, so 3 ETFs with different flavors. The Financial Sector Spider Fund, XLF, is the largest financial ETF. It is very diversified, market cap weighted ETF. It holds all segments within the broader financial sector, very cheap with an expense ratio of just 13 basis points, very popular with 24 billion in assets under management. Now, to learn more about this ETF, you can go to the quote page on Zacks.com. You can read our report, articles, and you can also go to the external homepage, State Street Spider's webpage for this particular ETF, and look at other details, including holdings for this particular ETF, the portfolio. Now let's look at the portfolio first. As I mentioned, it's a diversified financial ETF. So it holds banks, capital markets, capital market firms, insurance companies, other diversified financial services provider, and even consumer finance companies. Now looking at the top holdings, Berkshire Hathaway is the biggest holding with about 13% allocation. Then JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, and US Bank Corp. These are some of the biggest banks in the US, so they occupy a lot of weight in this portfolio, which is a market cap weighted portfolio.
All right. Tell us about the Invesco KBW Bank ETF.
So XLF, as I mentioned, it holds all segments of financial sector, including insurance companies, capital market firms, and others.
Right.
This focuses on U.S. banks.
Okay.
So if you are interested only in the banks, take a look at this ETF. This is also market cap weighted, 35 basis points in expense ratio, and pretty popular with 554 million in assets. Again, to learn more about this ETF, you can go to the quote page, and it has a nice dividend yield to about almost 2.4%, so that appeals to yield-focused investors as well. You can also go to the external home page, Invesco's web page for this ETF, and look at the portfolio. So again, as I mentioned, it holds some of the biggest banks. It focuses on U.S. banks, Bank of America, JP Morgan, Citigroup, Wells Fargo, and U.S. Bank Corp, the biggest banks in the U.S. They occupy top spots in the portfolio.
Then there's the SPDR S&P Regional Bank ETF.
So this holds regional banks only. So if you are interested in regional banks, you can take a look at this particular ETF.
Okay.
This has an equal weighted portfolio, same expense ratio as the other one, 35 basis points. And this is also pretty popular with 1.8 billion in assets under management. Now let's go to the quote page to learn more about this ETF. This also has a nice dividend yield of 2.2%. You can also go to State Street's webpage for this ETF to learn more about holdings and the portfolio. It holds only regional banks. And looking at the portfolio, as I mentioned, it's an equal weighted portfolio.
Mm-hmm.
First Republic Bank, Zions, PNC, Comerica, these are among the top holdings, but again, holdings are almost equally weighted in the portfolio.
All right, let's see how they stack up.
So on this chart, on this slide, I have the year-to-date performance of all these ETFs versus the broad market ETF, which is the S&P 500 ETF. And as I mentioned, this had all these financial ETFs had lagged earlier this year. The regional bank ETF is still lagging behind the broader market, but all others have kind of caught up with the broader market because of the rebound seen in the past few weeks. Now on this slide, I have the performance since September when they started rebounding. So you will see that the one that focuses on bigger banks, the Invesco KBW Bank ETF, that is the best performer since September with a gain of about 18%. The regional bank ETF is about 15%, whereas the broader financials ETF is up about 11%. And during this period, the S&P 500 ETF has gained about 6% during this period.
All right, do you own either of these?
I do not.
Okay. Thank you for that information. Always more ETF information on our website, Zacks.com. Go to the homepage, use the Funds tab in the top toolbar to help guide you there. Also, Nina covers a lot more variety of ETF information in her podcast, her audio podcast called ETF Spotlight, and that you'll find in the podcast section of our website. Back to the homepage, all the way down to the bottom of the homepage, click on the word podcast. It'll take you right to that section of the site. And here's something else you might want to consider. For a limited time, you are invited to follow market insights, buys and sells from all of Zacks' recommendation portfolios, and you can do it in real time. And you can do it for only $1. And you can even take a look at what's going on with services that have been closed to the public, only open to subscribed investors. All you need to do to get there is go to Zacks.com/promo, and that'll give you more details. Meantime, with Nina, I'm Terry Ruffalo.